The Rebel Capitalist Show.
I think a lot of people, they conflate the future of Bitcoin with the price of Bitcoin. And I think it's more interesting, and I could be wrong, if we kind of compartmentalize the two. Because I think that Bitcoin could go to, I mean, you name the price, 100,000, 500,000, while at the same time, it doesn't necessarily have to become global money. In other words, there is no fiat. There is only Bitcoin. All transactions globally are done in Bitcoin. All lending is done in Bitcoin. I don't think it has to get there in order for people's price targets, let's say, even optimistic price targets, to be hit. So,
Right.
the price is just pretty much simply supply and demand type stuff. But as far as it becoming global money, I think that's a really interesting topic of conversation. And so I'm sure you've thought this through. What do you see? Are you someone that believes that Bitcoin will be global money and replace fiat? And if so, kind of what are the step-by-step process that in your mind, the highest probability of how it would play out?
Yeah, that's a great question. And I agree, you can totally disentangle the price discussion from the general monetary penetration discussion. Although, of course, if you have this optimistic view about Bitcoin, the monetary protocol, the monetary system, and things go according to plan there, most likely that has a very positive effect on price. But I don't know if there is a plan. I mean, I can't speak for Bitcoin. It's this very organic thing that has so many different stakeholders worldwide now. If I were to put forth, my opinion as to a plan, I have no enforcement, or I have no ability to enforce that. All I can do is sort of suggest avenues the Bitcoiners can sort of try and take the asset. But that's the kind of the beauty of Bitcoin, is that it's so resistant to capture, or it's resistant to people putting these intricate plans in place. So honestly, there is no plan. It's just almost like wait and see, like, okay, how does the world react to Bitcoin? What kind of products are built around it? How does Wall Street financialize it? How do we, sort of the stewards of the protocol, make sure that it works? And then it's almost like letting it run free from there. I can sketch out a vision for what that process might look like, for sure. But I would not, I think it would be really presumptuous to claim that there was a plan, or that I was in any way, speaking for Bitcoin kind of thing.
What needs to happen for the volatility to lower to the point where it's has the volatility of gold, let's say?
I think that's going to be a challenge. First of all, there's a structural factor, which means that Bitcoin will most likely always be more volatile than gold, in my estimate, because gold has a supply response function to price movements, right? It has the supply elasticity. So if the price of gold massively skyrockets, a bunch of mines turn on, and a lot of economists talk about this. A lot of new mines will come on that are profitable at those thresholds of price, and so that effectively attenuates the reaction function, right? And similarly, if gold price drops, then a lot of mines turn off, and the new flow of gold decreases. So that's a nice countercyclical pressure, which keeps the gold price from being too volatile in the long term. Bitcoin, by contrast, does not have that. In fact, Bitcoin is specifically designed to be perfectly inelastic with regard to price in terms of the supply. So,
Differ, Nick, if we had fractional reserve banking or lending that was based on Bitcoin?
yeah, that's a great question. It's hard to forecast how that would work, but yeah, you'd effectively have a money supply which was sort of independent of the base money to a certain extent on Bitcoin, and you imagine that would be more a function of the credit cycle at that point. But just considering the base asset itself, like Bitcoin is custom built to be completely inelastic with regards to price from a supply perspective. So you're always going to have volatility. That's, in my view, a feature, because you're getting this really nice property of extreme monetary soundness and this very direct conveyance from demand into price with no, it's sort of a very pure signal from demand through to the price itself. But a lot of people dislike that feature and they wish that it had more moderation. But that's sort of what you're getting when you buy Bitcoin. You have to come into it with sort of open eyes. The other thing I'll say about volatility is that I view volatility as a function of uncertainty, and the market is very uncertain about Bitcoin. Of course, no two people have the same valuation for Bitcoin, same expectations of its future trajectory. So it's not surprising that it's super volatile because there's so little consensus as to what it should be, what evaluation methodology is composed of. So maybe, in 10 years' time, when you've got a bunch of sell-side desks with, really high-quality research analysts that are crypto natives and they all deeply understand Bitcoin and the price drivers, at that point you have less volatility because there'll just be a better institutional understanding weighted by capital, better understanding of Bitcoin, and so it'll be slightly less volatile, if I had to guess.
So, okay, if it's going to remain slightly more volatile than gold, my next question would be, how does it work from a standpoint of lending? Because if we move into a Bitcoin-dominated monetary system, let's say, the fact remains, I don't care how deflationary it is or whatever, people are going to need home loans, they're going to need car loans. You've got the euro dollar market, you've got foreign corporations, you've got corporations that are going to need, there's got to be some debt in the system, or else the growth, our economic growth will be constrained to some degree globally and locally. So if it's volatile, that's what I was trying to think through the other day when we were on Clubhouse. And I was thinking, okay, well, if it's appreciating in value like it is right now, and I know longer term we have a lot less volatility, but if it's appreciating, then what's your interest rate there that you would be, as a borrower, like right now, to take it to an extreme, there's no way that you would borrow, like, let's call it 5 Bitcoin to buy a house if you knew that you had to pay back those same Bitcoin in 5 years, if you thought the price of Bitcoin was going to be $500,000. that would not be a good deal. So how, if it remains as volatile, how do we incorporate lending in the system to where it can take over the entire monetary system itself? Does that make sense?
Of course. No, it's a great critique. I heard the same question from Larry White, the economist at Cato, when I had the same conversation with him. And his objection is that there's no Bitcoin denominated credit. And that's the foundation of a monetary system, really. And what's interesting is there is a Bitcoin lending market. There is a Bitcoin interest rate. It just happens outside of the banking sector. It happens at FinTech companies, basically. So you've got all these lenders. We're investors in BlockFi, for instance. You've got Celsius, Nexo, Genesis, Ledin. Like, there's a number of them. And collectively, my guess would be their collective loan portfolios are sort of 20 to 30 billion plus in the aggregate. So, there's material credit creation that occurs in Bitcoin.
Lending out the actual Bitcoin at a specified interest rate.
Yeah, and the Bitcoin interest rates are like 7 to 10% typically. And as a depositor into one of these services, you'll get paid slightly less than that because they, of course, take a spread. But yeah, so the weird thing is that lending does occur. And then you might ask, okay, well, what are the conditions under which lending occurs? Well, as you sort of hint at, it has to be a situation where you have a Bitcoin denominated cash flow coming out the other end. So you can match the maturity of your asset and your liability. So the people that borrow Bitcoin are basically Bitcoin related businesses that can earn, they can put that Bitcoin to work, and they specifically need Bitcoin, and they can earn Bitcoin denominated cash flows out of that. So it would be market makers, it'd be arbitrage funds, it'd be proprietary trading desks. Those are really the big ones. Then you also have Bitcoin exchanges, interestingly, and you have sort of other Bitcoin service providers like Bitcoin ATMs, anyone that needs liquidity in Bitcoin, that wants to lower their cost of capital, that has the capacity to earn Bitcoins, and so they have sort of their cash flows of this correlation of the Bitcoin price, right? And you might ask, why would an exchange want to borrow Bitcoin if all the exchanges are meant to be like fully solvent, backed, and so on? Because they're kind of like narrow banks. And an interesting thing is that they don't actually necessarily want to, pull all their Bitcoins out of cold storage to honor client withdrawal requests and things like that, because of how cumbersome it is to engage in sort of key management. Oftentimes, even if they're fully reserved, they might actually take advantage of a liquidity facility like a lender to honor withdrawals, because they don't want to upset their sort of intricately poised cold storage situation. So interestingly, these Bitcoin service providers will borrow Bitcoin in order to obtain sort of hot wallet liquidity, if that makes sense. So there's like interesting reasons why people borrow Bitcoin out there. And then, of course, that's like a really narrow set of entities. I would expect that to see that grow as the Bitcoin economy grows. But yeah, it's like a pretty niche, asset class right now, I would say.
Yeah, I think the key takeaway there, though, is in order to borrow Bitcoin into the foreseeable future, you'd have to have Bitcoin cash flow, because if you've got fiat cash flow and Bitcoin debt, you could run into some big problems right there. And who knows what that interest rate would be. So I guess, like, in my mind, I see it as, okay, we've got to make it transactional. If it's transactional, then it's reducing vol. And then also, once it's transactional, so the average person or entity would have Bitcoin cash flow, then it could take on this life of your typical debt that we know today in society.